Now, most of you already know that load shedding is one of the things that is really hurting SA's economy at the moment. I mean, according to the South African Reserve Bank, load shedding, it is making South Africa lose over 400 million rands per day. And of course, this is when we look at, of course, stage 4, or the current stage 4 that is being implemented almost on a day-to-day. And if these, or if we get to see load shedding being implemented at stage 8, South African Reserve Bank made a prediction of saying, or did a forecast of saying, that we might see then that resulting into SA, or South Africa, losing up to 899 million rands per day due to this load shedding. And this, ladies and gents, it is not doing any good to obviously our GDP or our economy in South Africa, as you already know that due to this load shedding, ladies and gents, or the fact or the reason why we saw, of course, a huge drop into our GDP of 1.3%, it is one of the main contributors. Load shedding is one of the main contributors that led into that. Now, those GDP figures were bad. In fact, the South African Reserve Bank have even now cut their forecast of the GDP, of course, for the rest of 2023 years from 1.3% to 0.3%, and analysts are also projecting or expecting that it can even be worse than this 0.3%. Now, this is something that is bad not only to investors but to also, of course, to a country like South Africa, because, ladies and gents, technically, if we are to get another, of course, decrease or another slump into, of course, the GDP for the Q1 of 2023, which is very likely possible, we are going to see South Africa entering or going into a recession. Because a recession, you will know that it is when a country reports a decline in GDP for 2 consecutive quarters. Now, we have already seen a decline in Q4, and so many analysts, and even, of course, myself, I would also like to predict, or I would like to think that there's no way that we can run away from this country going into a recession. So Q1, or the GDP figures for Q1, are pointing towards SA going into a recession, which is something that is not good at all. Now, this, or the main contributor, like I said, it is, of course, this load shedding. I mean, this goes into an extent of hurting retail investors like you and me, as obviously, ladies and gents, companies do not perform good, or we cannot expect our companies that we invest in locally to grow when the GDP or when our economy is shrinking. This is something that obviously it is not good, and it is not good for the companies that we invest into SA, which is why, ladies and gents, it is important that obviously you try to diversify your portfolio, as that, ladies and gents, will definitely make you to obviously reap the good rewards from other, of course, countries which are poised to do very well in 2023. Now, before we dig deep into this video, you already know that this video is just an entertainment video and not a professional financial advice video. Now, I would really appreciate if you can just hit the likes button if you are enjoying the content that I'm giving you about SA going into a recession, which is most likely, right? So yes, some of you might know, those of you that watch videos that I did on the weekend, I was wearing my sunglasses due to the fact that my I had sort of like an eye infection, which today I'm feeling much better, which is why I don't have the sunglasses. But yes, yeah, the eyes are still not 100%, but I hope that, of course, as the week unfolds, I'm going to get much better. So thank you for those of you that, of course, some of you that prayed for me. I mean, I received some text from some of you guys hoping or wishing me a speedy recovery, which I truly appreciate, right? Now, without a waste of time, the reason why, of course, we think, or I think SA is definitely going into a recession is, of course, we know that, of course, they reported a decline into Q4 GDP, or we saw a decline into Q4 GDP figures, which obviously analysts, or so many analysts, are also expecting a further decline in the Q1, or in the GDP figures for Q1 of 2023, which that, if we can get to see that, then SA will be technically, officially in recession, which is not good for investors. I mean, the year to date, we've seen apparently investors flying away or taking their money out of course, South Africa. These international investors believe, or this or is a sign that obviously they don't have trust or hope into SA's economy. Actually, according to, of course, City Press, over 100 million, and these are SA bonds and stocks, so they were sold. And if we are getting to see that, it means that most international investors are starting to lose hope on the growth of SA, which is why year to date we've seen, of course, stocks and bonds being sold by, of course, investors year to date, which is something that obviously it is bad, right? It makes me want to think, of course, about those that are all into putting eggs into one basket, or are about just investing into the SA market or SA stock markets, because if international investors or if the big guns, big institutions are selling their positions into stocks or SA bonds, this just has to show you that obviously, yeah, in the near future we might see SA not doing well, not just economically, but even the companies that are in SA or that are listing or doing business in SA might not even do well. I mean, it is, of course, we are seeing companies overspending due to load shedding. We are seeing companies or like big retailers like ShopRite having to spend around 3 million rands per day just to make sure that, of course, the business continue running after these power cuts or load shedding that we are getting to see on a day-to-day. Same as Pick and Pay, they are coming with drastic measures that is costing them millions and millions to try to make sure that it is business as usual in their stores. So load shedding, it is one of the things that is not only hurting consumers, hurting investors, but it is also hurting the companies, and companies won't be able to perform the way they should due to this load shedding. I mean, same goes to the mines. You know that companies or mines are also complaining about this load shedding, saying that they have to cut their production due to this load shedding. So load shedding, not only is it hurting consumers, but it is all hurting, or it is gonna hurt the companies that you and me invest in, of course, locally or in the Johannesburg Stock Exchange, which is something that you must definitely take into consideration, guys. I think now, or what I think one should do as a retail investor, is to try and diversify. Don't just put all of your eggs into the SA economy. Don't just invest into SA companies only, but rather take some of your money, go and take it to the US, go invest into the US, go invest into the Australia, go invest into some of the countries abroad, go invest into China, because China is one of the countries that, ladies and gents, if you didn't know, it is one of the countries that its economy, it is quite stable, because inflation, or when you talk about the cost of living, in China, it's currently sitting around 2%, which is something that must just show you that economy in China, regardless of the COVID-0 policies that we've been seeing or that we saw it disrupting China's economy, they are still doing really good, or economically they stand in a better position. So it is an opportunity that maybe you start also considering companies that are in China, maybe when you want to invest. I'm not saying do that, but I'm just giving you options that you might do, because, ladies and gents, if you are to find yourself putting your eggs or all of your money into SA, then it's either you won't see growth, or you are going to see a very slow growth into the companies that you are investing in. And the fact that we saw, of course, the big guns, or we are seeing the big guns, or people with a lot of money taking or having to sell bonds and stocks of around 100 million rands year to date, just has to show you of what we are headed towards as a country. So as long as we are still experiencing this load shedding, as long as our economy is not stable, then we are going to continue seeing, of course, investors not coming into South Africa, or international investors coming into South Africa and invest into this country. I mean, you will know that 2-3 weeks ago we just got, or SA just got greylisted, which that again, it is very bad for this country, when especially looking to, of course, the investors or international investors, as when they want to come, of course, to invest into SA, they need to do some serious due diligence, because then South Africa, it's a country that is put sort of like under riskier company when it comes to investing. So this is not good, or that also it's something that is not good. Though of course South Africa, we heard that also from the president that obviously they are working on getting out or taking South Africa out from that grey listing list. So yes, though it is something that if it happens, it is something that might take around 2 even 3 years. It is something that obviously putting SA into a bad position. So otherwise, with all that, guys, I just thought I should just give you these quick updates of saying what is it that we can expect in SA going in the future, especially looking at the fact that we might be, or SA might be heading into a recession, which is something that won't be good to, of course, our economy, or that will not be good to even the companies that we invest in locally. Otherwise, if you enjoyed this video, don't forget to hit that like button, comment and subscribe. And once you subscribe, don't forget to hit or click that notification bell so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.